breaking economic data. There are revisions to the Bureau of Labor and Statistics data for payrolls. We're expecting a drop again. Last time we saw a drop of 818,000, and wow, this time we get a bigger drop. Let's get over to Michael McKee right now, Bloomberg's international economics and policy correspondent, with the numbers. Mike?
Well, it looks like a big miss in terms of the upside. We're down 911,000 jobs from what we anticipated last year. This is through March of last year. So there were 911,000 fewer jobs in America in March of last year, and that's for the 12 months that go back from there to April of 2024. Does it mean a lot? Well, it would mean something if it really stayed that way. We do anticipate some additional changes to it before we get to the release of it in January, the final release in January, in the January employment report. What this means is about 76,000 fewer jobs a month were created in that year from April 24 to January to March of 2025. Shows the economy was weaker than anticipated. We don't have a month-to-month breakdown. We do know that this is just for that 12-month period. Once we get the January final revision, then they'll break it down by month. But essentially, at this point, we're looking at a much weaker economic picture for the labor market over the last year or so.
So just looking at the market reaction, Mike, you get an S&P 500 that still remains little changed. It's basically flat, as is the NASDAQ. The real move potentially in this bond market, where yields have been moving higher, now those are also unchanged. So giving up some of those losses for at least the front end of this curve, turning into very, very slight gains. Mike, if this means that the job creation, the job growth starting last year was a lot slower, again, this is backward looking. Through March, does it change anything for the Fed here today for the decision coming in September?
No, it doesn't, because the Fed knew that we were going to have a revision, and they knew it would be large. They didn't have the exact number, but they knew that the labor market was weak. And remember, last summer, in the months leading up to the September 50 basis point rate cut, the Fed saw and said the economy, the labor market was weakening, which is why they went 50. So we don't, as I mentioned earlier, have the monthly breakdown, but it does suggest that the Fed was correct in its diagnosis of the economy at the time. Now we have to figure out, what does it mean going forward in this September? But we don't have any data between that would contradict what we've got between March and now. So they're looking at what's happening now and going forward, rather than what happened essentially months ago.